There are many myths, and we have to declutter the myths and actually arrive at a fact. Now, first about the cash flow. People ask, why should we maintain day-to-day expenses? अरे यार कौन करता है ये सब? The process is tedious. It is not tedious because you have to have a account of how much is your income. That is the most important part. That how do we do it in a more detailed manner, in a more technical manner, in a more practical manner. You at least need to have a handle of how much you're earning, approximate, and how much are your expenses. So this cash flow, which is there, makes you and your family write down every expense, right from grocery to your household help, to your utilities, to your insurance premiums, to your lifestyle, how much you spend on restaurants and movies, and how much you spend for children's education, how much you spend on traveling, vacations, everything. In financial planning, a person does this exercise, he finds it is an eye-opening exercise. His myths are cleared. That he understands that if I have written 100 rupees, say for example, is my monthly income, and when I put pen to paper and I find out that honestly when I'm writing it down, my expenses are coming to 120. That instance where you are earning 100 and spending 120 is a negative cash flow. Okay, you will soon be in a very, very problematic situation if a person has a negative cash flow. What is a positive cash flow? You are earning 100 rupees, you are writing all your expenses very honestly, and you find out that you're just spending 40 rupees. Good for you, you're spending less. That, if you find out, is a positive cash flow. Again, your money needs to work for you. You need to invest. There's a difference between saving and investing. That saving is an emotion. You feel good about what you save. But investing is an action. It is a measured art. Now, net worth. What are the myths surrounding net worth? Okay, when you write down all your assets, you have assets of various kinds. You have fixed deposits, you have corporate bonds, you have mutual funds, you have stocks, you have real estate. Now, all those are your assets, and you say, oh, that is my net worth. Against that, at a point of time, if you have borrowed money, now either in the form of a loan, what is that outstanding loan as on date जब आप हिसाब मिलाते हो? So for example, you have taken a loan of 50 lakh, and as on today when a question is asked on to you that how much of that loan is still pending, you say 25 lakh. Plus you have a credit card outstanding of say 1 lakh rupees. Now all that, your loan and your credit card, 25 and 1, 26 lakh rupees, has to be first taken as a liability, and from your assets which is there, 1 crore minus 26, 74 lakh is your net worth as on today. That is how net worth is calculated. It's a very important parameter to understand, because we get to know where has a person invested in. Has it been in the right instruments? Has it been just lying idle or not growing? So that gives a complete handle of the assets. When you come to real estate, people say that I stay in a house. My house worth is today 2 crore, and where I am staying in Bombay, and all my other assets are which I have FD and everything is another 50 lakh rupees. So my net worth should be, and I don't have any liabilities. So my net worth should be 2.5 CR. This is a myth that in financial planning, when you are tagging all your assets to help you achieve your goals, you cannot have the resident house in which you are staying as your asset, because you are not going to sell that house to achieve a goal. In fact, it's a liability, because every month, every day you are spending on that house. Okay, so something is going out of your pocket. Now you cannot talk about appreciation and all that things, because you're not going to sell it in the first place. So this is a myth. So for me, that person's net worth is only 50 lakh, and the house in which he's staying is not an asset but a residing house. Insurance advisory. What is the myth in it? The myth is that when insurance is bought, okay, the first question they ask is that after I pay the premium, do I get anything back? And they say that if I'm not going to get anything back, then why should I be paying the premium? They will always say that, I want a policy which at the end of a certain time period gives me something back. Now, what you are doing inadvertently is you are asking the insurance company to invest your money. You want a guaranteed return, and you are ready to pay a higher premium or a sum assured or a sum insured which is not quite commensurating what your actual requirement is. If you put a financial calculator in place and endowment plans and everything, these returns are even not inflation beating those. And more importantly, what bites is that the sum insured is not at all adequate. The real product, the hero of insurance, which is the term plan, is always put on the back burner because the same questions arise in a term plan that they don't get anything back in a term plan at the end of the policy period, but they are, throughout the policy period they have been paying a very minimum amount of premium for a maximum cover. The second point which I'm saying is it's again very funny. I've encountered it with many people, and this is more pertaining to obviously taking a life insurance policy, but more important for health insurance policy. My future is intact. I will always remain healthy, wealthy, safe. And people also say that "Arey maut ki baat mat karo." Now this is really hurting. Okay, they are not ready to face the reality of life, and they are wiped out when a health claim comes, a hospitalization comes. So this type of mindset is really hurting to a family. Myths of financial goals. So let's start with this thing. I wish I can retire peacefully with a corpus of 5 crore. I want to buy a luxury car worth 25 lakh to 50 lakh rupees in the next few years. I want to send my children for higher education. Now, this as just wishes and wants. I have not put any numbers to my wishes or my wants. These are simple aspirations. These are just thoughts. Now, these are only true to the extent of you dreaming of something. You haven't actually fructified it or put anything into action. What are the beliefs which people have? Myths and beliefs are like, a thin line between them. You will come across various people having various risk parameters. It's your job to, dissect them. You will find that many young people do not want to, get into equity. They are investing in fixed deposits as a beginning. Okay. And senior citizens, on the contrary, they show a channelization towards investing in equity. Death by debt. People think that borrowing money or taking loans is the only solution for reaching your goals. Believe me, they become slaves for the rest of their life. Every rupee they earn today is to repay their future. Again, a notion, a belief should be done away with. Plan and then achieve your goal only as a measure. If for some reason your planning doesn't work out well, keep a loan as the last option, not as the first. How your family thinks about finance, how your family thinks about money, how your family thinks about products has a big bearing on your upbringing and having a bias towards a certain product. So in your family, you have got always to hear that real estate acha hai. You will grow up with that mindset. You will not open up your mind and thought process to दूसरा कुछ भी अच्छा हो सकता है. Or somebody would say that I only buy gold. They have always been buying gold for every Tom, Dick and Harry occasion. Or somebody is just doing fixed deposits. So the point is that your behavior gets influenced by how your family has been there, doing it at their own time. You should be looking at it in a neutral way. Today we are in a very, very fortunate atmosphere where there are so many options for us. So do not create a bias, but think and act.